Welcome back to QAV Australia, Tony. This is episode 825. We are recording this on the 24th of June, Tuesday, the 24th of June, 2025. Tony, why don't you do your COG? Haven't you done COG before? I feel like you've done COG before.
Well, I felt like I had two, and I couldn't. I tried to search for it. It's not on the pulled pork list. Tried to search the website for it. There was a few mentions of it, so we've certainly talked about it before. But if I have, it'd be a number of years ago. So way back, probably in the first year of QIV, I would have thought. And
Really?
yeah, so I went back and had a look at their share price, and they ran from 55 cents 5 years ago to $1.81, and now they're back to 90 cents. And they got back to 90 cents, in November 2024, and now they're on a tear again, back up to $1.53. So, they've, tripled, I guess, over in the last 5 years, but they have gone up and down along the way. Who are COG Financial Services? They're a finance broker aggregator, I guess is probably a better description of them. So they provide frameworks and services if you're a finance broker out there arranging particularly equipment leasing, and particularly for small to medium enterprises. So their business model is they go off to loan providers and do a bulk buy deal, much the same as a co-op would, I guess, and then go out and sign up small individual brokers like accountants or whoever. And then those people get a good price to go and offer to their clients who might be in the market for equipment for a building site or a photocopier or whatever. So that's the role COG do. They also obviously do a lot more than that. So they have a good IT system. They have good training. So if you are in the business of doing this, they provide a lot of your back-end support for it and leads generations and all that kind of stuff. They claim to streamline the loan application process using their IT platforms, take a lot of the paperwork out of the business. So a lot of good stuff if you're a small broker out there in that space. They claim that they have a lender panel of 50 or more asset lenders. They arrange commercial loans for equipment purchases, everything from coffee machines to dump trucks. This is all from their website. They do a lot in the novated leasing space. So we've spoken about companies like Mellon Shakespeare who provide that kind of service. These COG also help facilitate that for the smaller end of the market. They have a car buying service, which I thought was interesting. So because part of that to fleet management and novated lease space is you're buying cars on bulk and then probably in the next 4 years selling them again. Oftentimes at a wholesale type price, you can source vehicles for people at wholesale prices. So that's an attractive add-on if you're a small broker with a client base. You can offer them that service as well, which might be attractive for them. And they also facilitate cross-business access too. So, if you are on their books, and you might pick up some business from other people on their books and vice versa. So that's COG. What else can I say about them? They represent 8.9 billion per annum of net asset financing. So that's through the brokers on their books and the loans that they've sourced from the big lenders. They operate through a number of different banners, like, for example, in the novated leasing space, they operate through Fleet Network, Paywise, BCarWise, and a couple of other brands. They operate peer-to-peer lending through a brand called Equity One, and that's a fee-based business, so they're not exposed to changes in interest rates. So they're kind of fairly innovative. They've been around for 20 years. They were formed following the merger of two asset finance aggregators, being Consolidated Finance Group and Platform Finance Group. Consolidated Finance Group was originally established in 2005 and Platform Finance in 2010. Although separate aggregation businesses, they complemented their models with compliance systems and infrastructure to support the asset finance broking firms and brokers who were part of their groups. So that's the history. They've been around for a while. I think they were spun out of a larger business when this division was set up and became profitable, and the operators saw some growth opportunities. And it's been around for 20 years, been successful since then. Recently in the news, back in March, and this is from the AFR, eyes on COG Financial's register after Tony Robinson storms the board, according to the AFR, March 26. To quote this article, grab the popcorn, things are about to get interesting at COG Financial Services. A sleepy little roll-up of broking, leasing and lending businesses capitalised at $189 million on the ASX. Well-regarded financial services executive Tony Robinson, who last year sold ASX-listed PSC Insurance to UK giant Ardona for $2.2 billion, was announced as COG's new chairman after Wednesday's market close. This is Wednesday at the end of March. He's brought along another PSC operative, John Dwyer, as a non-executive director, and investors are expecting miracles, both at the business level and in its M&A prospects. What the ASX filings missed is this: Robinson's arrival has also sparked a change on its shareholder register. Street Talk can reveal NAOS Asset Management and COG Director Cameron McCulloch's GEGM Investments were the sellers behind a parcel of about 28 million COG shares traded by stockbroker Morgan shortly after 6 p.m. That's not surprising, given NAOS last year halved its stake from 31.2% to 16.56%, while McCulloch's just moved to an NED, etc., etc. So a few things happening. It doesn't look like the share price has done much since then, but it has been going up, possibly because of this Tony Robinson getting on the board and people expecting M&A activity. He certainly has a track record for it with the insurance company that he sold after growing. So he's seeing opportunity in this space and has come onto the board. He and Dwyer, his friend, will be granted 2.5 million unlisted options with a $130 exercise price and a 31st of March 2028 expiry. So that's a 38.2% share price increase that the ex-PSC duo think COG is capable of delivering in the next 3 years. COG were down up until March 33% for the past 12 months. So we'll see what happens. Watch this space. And again, perhaps this Tony Robinson is seeing things to like about this company as we are. Latest results, revenue was up 7%, NPAT was down 3%, but they add back a whole heap of transactions adjustments because of the roll-ups and claim 3% growth on an adjusted basis. I'm not sure if that's the way to measure the company. I kind of like NPAT, but down 3%, revenue up. I'm going to use going through the QAV numbers, I'm going to use June 2024 numbers. So we don't have in Stock Doctor the December numbers for some reason. I'm not sure why. But so these are going back a ways. But on this basis, they were good numbers. Stock price used was $1.53, which was greater than IV1 of 46 cents and IV2 of $1.21, but was 10% above consensus forecasts. We're seeing value. The market is not necessarily so. ADT is around $300,000, so not overly large, but would suit portfolios up to about $1 million in total value. Company's paying a dividend of a yield of 4.8%, which is pretty good, but not quite high enough to score for us. Stock Doctor Financial Health and Trend is strong and recovering, and we like recovering companies, and we score it a 2 for that. Stockopedia quality rank is only 59, and their S score is 5 out of 9. And COG is marked down in their S score for things such as long-term debt is increasing. But that's not a bad thing. So if you're an equipment leaser, you want long-term debt to be increasing because you're then on selling it out, breaking it up and on selling it out in small equipment loans at a higher price. So that's showing growth in the business. So um, I know the F score is a pretty good thing, but when it comes to financial companies, it can get a bit skewed. So Stockopedia have it as quality score of 59, largely because of that increase in debt. The overall stock rank, though, in Stockopedia is 96, which is pretty good, pretty high. PE at times of the results was 11.6, which was the lowest in 6 halves, but it is higher than that now, but we will score it for that. Prop cap is 6.66 times, so it's low, but it's getting up towards our cutoff of 7. Net equity per share is $1.01. Share price is $1.53, so we can't score it for that. And I do highlight there's a lot of goodwill on this balance sheet because they have been aggregating companies. NTA is only 13 cents. So depending on how you like to view things, bear that in mind. Share price, however, is greater than book and book plus 30%, and obviously greater than net tangible assets. So we're not scoring it to be able to buy at book price. Forecast earnings per share growth is 33%, and growth over PE is 1.93. So it's scored a 2 for that. And there has been a director around since 2016. Interestingly enough, that was the guy mentioned in the AFR article who'd sold down nearly half his shares. So Cameron McCulloch is still listing ownership at 16%, even though he's sold down. He has been around for a long time. I couldn't quite call him an owner-founder, but he's certainly been along for the ride for a long time with this company. So I am going to score him as an owner-founder and give it a score for that. It's a recent 3-point trend line uptrend, doesn't have consistent increasing equity, and overall scores 14 out of 16 for quality, with a few 2s in there on the checklist, and the QAV score of 0.13. So getting down towards the bottom of the buy list, and certainly the prop cap was getting up towards our threshold. Risk, the founder, Cameron McCulloch, sold nearly half his stake at the end of March, and I think the share price has been up since then, so he might rue that, but it's possible he had to do that to allow the Tony Robinson and his mate to get onto the register. I'm not sure. But the positive was this experienced operator in the finance sector, Tony Robinson, becoming chair of the company. So that's COG Financial.
Thank you, Tony. We do own it in a light portfolio. We've held it for about a year. It's up about 12% since we bought it, so not shooting out the lights, but that's not bad. 12% up in a year. I'll take that. Mm-hmm. There you go. Very good. Yeah. All right. All right. Have a good week, Tony.
Thank you. Happy ASX.